Hey, welcome everybody. Good to see you. Good to see you.
Good morning.
Yeah. Happy Friday.
Sell them while you got them.
Man, that bond debit straddle is just kicking butt.
Yep.
Man.
I think, hang on, I better not open my mouth here, but I think they even sold Tesla a little bit.
Yeah, they did sell Tesla a little bit. They're 562. I think I saw 550. I saw 555 for a minute, but $10 down.
See if they can close that gap down there at 548.
That would be stellar.
That would be. I assume they may try to do that into earnings, before earnings.
That would give them some headroom to jump into.
Yeah, because I mean we're not even down, well, where the algorithms will kick back in, so there's a little bit of room there. So
yeah,
who knows? Their broad averages are hitting it, but they're not. So that's a strong stock right now.
You saw that article on the
I did. I could not believe that. Golly. It's easier just to go with them, instead of fighting them,
Yeah, I feel you. Well, hey, everybody. Welcome to our live profiling Q&A session. It is Friday, January 24th, 2020. We're wrapping up the first month of the year. Always want to begin with that which we can control in markets, and that's risk. We cannot control where the market's going to go. We can't, unless you've got a really illiquid market and you have big size, you're not going to be able to push the price around. So you need to be first mindful of risk. I can always tell the difference between someone who's been around markets for some time and someone who has just getting started. The people who are just getting started only think about opportunity, and the people who've been around for some time think about risk. We think about risk. We know that that's what we can control, and we have control over that. Absolutely. Also, for those of you who are just joining us for the first time, way to think about our approach, because it's helpful when you're kind of sussing out different approaches. It's helpful to kind of know where people are coming from. We would consider ourselves behaviorists. We use the profile as a way to arrange the market information. So kind of like Jim Dalton would say, we're not profile traders. We use the profile to help us make discretionary decisions and see what's happening in real time on the hard right edge of the chart. We're not wildly. I mean, we watch fundamental data. Like there was a PMI report this morning that triggered some selling, but it was really that. I mean, it just triggered activity, not that we really had a hunch one way or the other. There's lots of ways you can approach the markets. You can be a fundamentalist where you can look at all of that stuff and try to guess and position yourself according to the fundamentals. We have found that for most traders who want to be fairly active, that's not a tenable position, because typically the length of time it takes for those fundamentals to converge is outside the scope of most people's solvency. Also, technicians. There are also technicians in the market. Those are those who look at specific price patterns, price action, and so forth to make decisions. We recognize that they can be very effective in their own right, but yet we see lots of times where like someone would use specifically an oscillator or a price-derived indicator, and that is it's lagging price. So we're behaviorists. We look at how is the market behaving at these certain prices, which prices are being accepted, which prices are being rejected, to give us a sense. It's not a guarantee, but it's to give us a sense of where might we go next. Just a quick welcome introduction so you know who's talking at you. I'm Josh. I'm the founder of Trade the Profile. Started my trading journey while in grad school, and I was one of those guys that went back to grad school after being in the workforce for some time. Got exposed to markets, did the retail thing for a while, kind of figured out that just spending time on the retail side wasn't going to give me the insight that I needed. When I got exposed to the profile in 2012, that opened the door to what what professionals were using in the market, and sought them out. Eventually worked in the industry for a GIB of RJ O'Brien. But all along, kind of my background is corporate development and team development, and so those skills, that combined with my desire to keep my own edge, one of the ways that you can make sure that you're on the front edge is to help build processes for other people to be effective, and if they're effective, then that's working well, as well, pertain to yourself. There's lots of people in the market that it's tough because there's people who are pretty good, effective educators who can't trade, and there are people who are really good traders who can't educate. And we're trying to walk that line between demonstrated effectiveness, but yet also, at the end of the day, it's about the team of traders that we're working with. With me is JP. Between the two of us, both of us have been on institutional desks, and what, brother? We're splitting. We keep edging towards we're past a couple decades.
Yeah, the longer it gets, the less I want to count it, because it just means I'm getting older.
JP's been in the markets a long time, but also former pro golfer, and so anybody who's been around markets, that there are so many parallels between what happens in markets and life. There's all these analogs to that. The process that you approach, I think golf's a fantastic way to approach that, because just like in trading, you're gonna take a trade that is just gonna be a bad trade, and you got to turn around and, like Mike Bellafiore says, take one good trade. So every trade is a new trade, a new approach, a new opportunity, and golf is a way to do that as well. Real quick, just kind of our process and what we do. We help traders who are still struggling with consistency find consistency, and I can't guarantee profits. That's ridiculous. But we can put a trader in front of process, and if the trader is disciplined with the process, that leads to consistency, and consistency leads to more profit. When you make better trading decisions, when you have a plan that you rely on, it leads to pluses in your trading account. And we do that through something called our Profile Trading Development Pathway. It's a 16 module approach. It basically takes all the stuff that I used to use on the desk with RJO and cuts it up into 16 chunks, based on something that we call our trade plan. And at the end of the day, when you come to a market every day and you have an idea, you have a plan, that plan came from something. It came from assumptions about how auctions work and how things operate. And so, we're trying to instill into you things about auctions that we know hold true, things that we know about auctions that are changing, so that we can put those into a plan and we can be prepared every day when we come to the market. Added to that, we're trying to instill, and this is a great check for you, in your own approach, kind of 3 areas of core competency, some focus areas that everything that we do is around, is being able to, 1, observe the 4 behaviors in the auction. And this isn't like, for those of you who've been exposed to Elliott wave or cyclical stuff, it's not like that. It's really just that in every market, there's a beginning, then there's a directional move, there is counter activity that shuts off that move, and then there's tests of that range. That's it. Like that happens over and over again. What's great about that is if you know those behaviors, then you know what happens next. 4 questions asked before entering a trade. What's the opportunity in front of me? Objectively, like, is there a target that I can see? What am I willing to risk for that target? What would tell me that I'm right? What would tell me that I'm wrong? All of those answered before you put the trade on. If you want to get better immediately, use those 4 questions before you put your next trade on. And finally, the 4 stages of auction competency, how to know which one you're in. Because when you know which level of competency you're in, you know where to go get help, and you know what's going to be helpful, and you know what will add value to what you're doing. And those are, stage 1 is an unconscious incompetence. We all start there, right? We don't know what we don't know. And so we get exposed to things. Like I got exposed to the profile in 2012. That awoke me, or awoke, that's a bad word. That woke me up to the idea. I got woke. That woke me up to the idea, one, that I was looking at an auction. 2, that there was a way to arrange the information to see where value was, and I already knew, just like many of you do. I know what to do with the concept of value. If you know where value is, you know how to position yourself. Similar thing. And then, but I didn't know how to really do anything with it. So that was a stage 2. Stage 3 was where I could put that in process and I could use that day in and day out, but it's clunky. Stage 4 is an unconscious competence where it's become instinctive because you've done the work. Okay, so that's kind of what we do. That's how we roll, and what we seek to do. Now, as is the case with most of these Fridays, open for any questions that you want to ask. I know we're going to look at crude, we're going to look at ES, we'll look at NASDAQ, we'll look at gold, and any other
NASDAQ here because they're getting ready to engulf actually.
Yeah, any other a sundry of products that you want to take a look at.
I like that word.
And again, in a sense, the only thing that we would ask is if you want to look at a specific product that is outside of those, we're going to look at those products identifying intraday swing trades, and that's kind of where we roll the time frame that we run. We're not scalpers. We're looking for, can I catch? I mean, a great day is if you could catch 25% of the range, which means today's been a pretty good day, and outside of that. We'll go from there. But we typically try to start with just kind of an idea of something that we've been working on and thinking about. And one of them is rules-based execution. So, and I want to show you an example of this, specifically around a trade that I've been stalking today in crude oil that really didn't materialize as of yet, and how using rules-based execution really helped with that. So I'm going to pull over a spreadsheet here and size this down. And then while I'm pulling this over, if you have any specific products that you want to look at,
or questions, either one.
Questions.
Glad to answer them. It's a Friday.
Let me know.
It's actually a good week.
So we're looking at 2 platforms here. We're looking at IRT from Linsoft. We're looking at Window Trader on the right, and both powered by IQ Feed data. And I was looking for a responsive opportunity in crude long today, and there's a specific setup that I look for that's called an IB extension fade, and was looking to exploit that. So the question is, you see an opportunity, and that's the thing with those 4 questions. You start with an opportunity, but then how do you know that it's in your favor or something that you want to do? And so what I've started to do is compile a checklist. Think of it like a flight checklist for all the setups that I trade, so that I'm thinking more algorithmically as I approach, and I'm making sure that I'm stacking as many probabilities and conditions in my favor around the opportunity, so that I know, this is one to look at, or hey, it's just not there yet. And so what I want to do is I want to walk through each of these criteria and look at the profile here and show why it's not been a great opportunity. And so even though I looked for it, tried to identify it, it has not shown up and is likely not to show up today. And so that's great. It also gives me freedom to get away from the market. So here's the first. Every setup, and when you're placing trades, it's good to know. That's funny. I just Siri was like, what? To name your trades, name your setups. So this is one that we put all traders in, called an IB extension fade. It's one to look for every day, and here's why. First, the first presenting condition is IB extension. So if you're unfamiliar with IB extension, what that is where the initial balance, or the first hour's range of a market, the first 60 minutes, and then that's extended. Okay, now in 97% of all trading sessions, we will extend the initial balance. It doesn't matter what product it is. We're going to extend that, and you can either look to go with that, or you can look to fade that extension. And so you always start with the presenting condition. So I'm like, oh great, I've got IB extension. Is there, what other things would I look for? And in this case, what I'm looking for to do is I'm looking to fade from the extension. So I'm not looking to go in the direction of the extension. I'm looking to fade that back into that initial range. And so the first one, yep, that checked off. We got IB low extension here in crude oil. Now, second to that is, are we extending away from, so like where we started from, are we extending away from what we call a multi-composite high volume node? Meaning, is this a break from balance, essentially? Now, if I go and look at the profile, I'll clear this real quick, and then just back up to get us a picture of where we are on the longer term. You see that the really big value reference much higher is at 58.47. That's our multi-composite level. We do have some nodes here like at 57. We had a node at 55.21, which is a key level this morning, but they're not multi-composite zones. So, as far as my list goes, I was not extending away, so that's good. Do I have an average or wider than average IB? I do. And why is this important for a fade? So the wider that first hour is, the more likely the auction is to have some rotation. Crude averages right now about, what are we doing? We're averaging 44 cents. You can see we did 91 cents. So more than double the average first hour's range today in crude. So that's saying, why is that important? Because I have not, how much opportunity is left if I've already spent that much range? Okay, next one, is 75% of the expected range used? And why is this important? Because this is helping me see, again, are the stats for the day in my favor, like it going towards further excursion, or back? Crude right now is expecting about $1. If you include Globex, we're at $2 of range. So, is the probability favoring you going lower? It could, yes, always could, but it's just not strong. So far, everything's checking out. Now, the next one is the developing volume point of control divergent to where price is. Okay, and this one is a big no. And what I mean by that, so the most traded price right now is 54.20, and price is trading at 54.11. We're basically at value for the day. There's no divergence, and that means that where unfair prices are that could favor along would be if I trade much lower and away from where value is, because then I can target back to that developing volume point of control. So that right there says, it's not there. Is there imbalance in the profile? Meaning, does the profile have a skew to it? Because if it has a skew, then that could say there's still lower prices to go. There is the bulk of the trade. If I look at this whole profile, all right, it's actually incomplete to the downside. We've stacked all this volume down here. That looks incomplete, like they could keep pushing lower. So that's also a knock against this trade. Have I achieved 1.5 the IB but not 2x? That one has actually worked. Do I have neutral or weak delta? Meaning, what's the order flow? Is it kind of sideways that would support kind of some responsive activity? No, it's pretty strong. Am I one time framing? Now I'm not one time framing, so that actually says it could work. Does the VWAP have no slope? What does this mean? Is the volume weighted average price, when the volume weighted average price is sideways, more likely to get rotations? When it's got a slope to it, the machines can just keep pressing that and not let up. We've had slope all day, so that is not a check. These are also related to VWAP. Have we touched the VWAP after IB? We have not. That's also an indication of struggle and rotation. Are we near the extended IB post 1 p.m. Eastern? So you can see after we broke the IB, we've been struggling to get back to it. We've got close to it. We have not been able to extend back inside of it. So that's also a knock. And then finally, is there a 5-minute spike in the direction? So this is, after all of these are in place, I finally want to look for a trigger, and I want to find a short-term trigger in the directions that I want to go that has strong delta, meaning the strong buyers in my favor to go with this, and there just simply is not. Now, kind of going back on this trade, and I actually posted a number of markups on this throughout the day. Early on, I did look for and actually did enter, and I want to show you where and when I entered, and then how I was wrong. so that you get a picture of that, and that's okay. The whole, this is the 4 questions. Is, can I know if I was wrong? So at let's see, right here, right in this area right here, where we had pushed out of the IB the first time. At that time, the point of control, we did have that divergence. The point of control was at 54.55. Price was trading down here around 15, and what we were looking for is we were looking for some strength to lean into, and we got that. We actually saw some selling here, making new lows that immediately in the next 5 minutes was countered. So that's a shut off of those sellers. They again tried to sell on weak delta and then came back with strong buying and then made a new 5-minute high. We bought on the pullback here with stops on the lows. That was the trade. And at that time, we had a number, far more conditions. We did have at that time we did have a divergence. Why is that not letting me click on that? We did have that. There wasn't imbalance in the profile, and we had, so not perfect. Not all the conditions are there, but it was a good stab. But now, you got stopped out, you look at it again, you go, now the conditions are changed. There's even far less criteria in the favor of this trade. So it's best just to let it go, and we'll take a look at it next week. Okay, so that's what I mean by rules-based execution. It's a way to think more systemically about, and eventually, I mean, you could, if you're using platforms like TT and others, you could actually start building these in. Maybe it's not fully automated, but it's something that can allow you or alert you to it can alert you to the conditions, so then you're ready to execute. And hey, if only these criteria are here, then everything's stacked in my favor. Let's go. And then tied to that, and this is another, as you're building your plan every day, and as we build our plans, one of the things that we do is we build scenarios or our hypotheses, because again, it goes back to the idea that I don't know, you don't know where price is going to go. Now, are there good likelihoods around that? Sure. Can we build a better narrative around others? Yeah. Did we know today that if the ES got below 32.20, that they could see some significant selling? Yeah, we did. Did we know this morning that there was potential to get back to 30.10 in the ES? Absolutely. Now, the fact that they've gone and engulfed the thing, that's less likely. But so you can build a better narrative around that kind of stuff. But even in that, it's an if this then that. Again, borrowed from programming language, but it's the idea of, hey, if these criteria are met, then I will do this. If these criteria are met, then I will do that. And just as an example of what I mean by that, I'm just going to go back and look at, I'm going to pull up our plan for the NQ, and okay, this is what a trade plan looks like. Okay, and this is my plan for the NQ coming into today. All plans start with a review, like which way is the auction attempting to go. The auction is really balancing. So even though we had buying strength in the afternoon yesterday, the auction's really just going sideways. We're in a range. We did have above average volume in range, but there were some weird things. That value was lower. That was kind of off. That the overall order flow was to the sell side, even though we went higher. There was divergence between the developing volume point of control and where we closed. I mean, we closed at 92.48, and we left a developing point of control, back way back in the 9200 area. Okay, so coming in today, here's the scenarios. Right, so we had higher prices in Globex. We knew that. So, and we knew that we had PMI after the open. So if we open outside of range, gap rules were in play. So this is the if. If we accept the gap, hey, we could have seen 9,300, no problem. In fact, the expected daily high based on the options market was 93.45 or 44 and change. Now, if we could accept back inside the range, we were going to watch for buyers first at 92.30 and 9200. That was prior inventory. That's where value was. Those are places. And then unless we close the week below 9,200, there's really nothing for the buyers to be concerned about. Well, guess what we're trading right now, gang? 91.45. So, and it's into the afternoon, full on trend day. At this point, still, any price lower is possible. This could be at least the beginning of a turn. Not necessarily like that the market's going to fall out of bed, but at least, hey, this animal spirit craziness that we've been experiencing in the last several weeks appears to be turning. Okay, so those are all the scenarios. And then as you go through your day, you're checking those scenarios to see and remind yourself which one's in play, which one's not. That can help kind of cut through all the noise and really improve where you're executing. Okay, so those are just two things. If this, then that, and rules-based execution. I hope that's helpful. If you have any questions about that, you can also ask us offline as well. Happy to do that. And with that, we'll get back to looking at kind of where we're at. And so we're going to, for the moment, turn away from Crude, and we're going to go back and look at, let's look at the ES first. ES is repairing a lot of damage. I think there's a pretty good chance we're gonna get to 32.83 by the end of the day. That's actually a good place for the auction to pause. And you don't see it real well on this chart, but if we add some cumulative dates. By the way, any questions on the on either the rules-based stuff or the if this then that while I'm pulling this up? Sally, we're looking at a window trader right here. Windowtrader.com. You see we have a really pronounced node here at 32.82. That was a prior weekly point of control and a multi-composite level. So we're expecting the auction to pause and at least re-engage some buyers if it gets down here. The auction has done a good job of kind of trading back and forth across prior inventory levels. All these green decision levels are areas we're expecting at least a momentary pause, and then we'll see. And you can tell that there's lots of strength in the selling today because we get some quick reflection off of that, and then we'll push back through it. And so one clue that just and we have different, we call out different levels because not every level is as important as another. But the bigger the node, the more likely it is to hold the auction. That's why if we got below 33.20, then they could really rock and roll to the downside. 32.83 is kind of the next one. If we close below that, that could be an early upside reference for next week, and we've got 32.35 as kind of a next node. Yeah, Gary. So that is two different time frames that we look for on multi-composites are on a kind of a weekly basis and then a monthly basis, and see where those key levels are. One way to look at that, and I'll just kind of blow this up and we'll look at the ES. Let's go to a 30-minute. Where's my little, there we go. So I've got two composites. These are rolling. So I've got a 7 calendar day, 5 session composite here on the right. And then on the left, I have one that is essentially a 30 calendar day, of session, so monthly perspective. Two massively key levels to know about in this, and actually a trade idea to put on right now. So we've got 3220 to the upside. To the downside, we have 3225. So that's the most traded price of the last 30 session, or rolling calendar day or month. You could put on a strangle or iron condor where your legs are above 3320 and below 3226, and you know that you're good on the trade unless you get above or below those. So those are that's kind of a good way to know, hey, I need to get out of this. Those are levels that should contain the auction. And actually, that's kind of what's happening is, this is really just shutting off the auction, the directional auction we've been in a long time. It's not necessarily a turn. This is just the auction going into that next behavior, which is rest. So now we'll expect this to, now we kind of know where the top is. We kind of know there's a top to lean into around that 3220. We don't yet know where the bottom is. A good guess could be this 3283. If not there, then it could be 3238, 3226 area. That would be the next place that we'd expect this thing to kind of hold on. But yeah, that's those. And in between those, with respect to context, because it's such, context is hard of knowing, like, what kind of things do you do in certain types of environments of the auction, knowing that there are different cycles of, and this isn't like cyclical in sense that there's cyclical nature. There are guys that do like different cycles. It's really contextual to say, where's price relative to value across multiple time frames. So we always want to know, where's price relative to value on the last week and the last month. Between those three variables, I can get a real quick sense of where I want to be on any market. And I mean, just to demonstrate that, somebody give me a product that's not NASDAQ, Crude, ES, or gold. And I could give you real quick some ideas around how we might play that market or what we'd be looking to do.
Live cattle.
Live cattle. Oh, you dude.
Josh owns that market. They've got the sell algos going today.
Perfect example. Okay. Is that almost went limit down, brother?
Did it? Yeah.
That's almost a $3 move.
Looky
there. Okay, so in this case, so here we have price. The most traded price last week and the last month are actually almost in agreement. So we would call this price below the 5-day, which is equal to the 20-day, and or 20 session. And this is a strong directional move. And so what happens here, and kind of how you play this and what you look for, is price moves away from value first. So value is going to have to catch up, right? So couple different things. One, we would lean against 126, and so however I would want to look short. I'm looking for this auction to continue this way. At least it'd have to pause for some time to migrate weekly value lower, but this is unlikely to be the end. So any kind of weak activity back this way that does not get back above 126 is an opportunity to get short. And then as far as like ultimately where that might go, I might have to go look at a longer term chart here. Just real quick, I'm gonna pull up this daily. Man, 91.30. Trend day, baby.
Just a little.
Gotta love the trend day. I can't remember the last time we had a trend day lower like that. Okay, so here's live cattle. You can see the break from the 20-day. Now over here, I've got a 90-day. It's a 3-month profile, and then these are monthly profiles with weeklies nested inside of them. And I've got a couple levels to look for. Like I got 120, 140, but really the one I'm interested in is 119.875. So that's going to be the target off of this move. So the idea is as long as we stay below 127-ish, I'm looking for live cattle to make a move towards 120. And couple different ways you could do that through put spreads. You could do that through short outrights. I think a little bit stretched today to go do that. And obviously the market's closed, so you're gonna have to look for rally potential next week for new lows to be short down there. I wouldn't even think about being long unless I got down here to around 119. If we go straight down here to 119 and we don't move value, then you got shorts that are starting to get a little ahead of themselves. So that's how we use that stuff to really quickly get us a gauge and be consistent. Being consistent in our application all the time. When you're consistent, that can help your planning. You know how to show up and be like, okay, I'm gonna do it this way, right? I'll do it this way. Works out swimmingly. Oh man, get that 83. I would
Swimmingly.
so love that. That's a new one, isn't it?
83 you're looking for?
Yeah,
I was looking at 91 down there too.
Did that answer your question, Greg? Is that good? Great question.
Great question.
Okay, look at gold here real quick. Gold, we were looking for 71 today, got 71. Actually, fantastic trade. I want to show you this trade. This is a favorite setup of mine. We had a nice break from balance yesterday. So a couple cool little things to show you in gold here. This is where the behavioral aspect stuff comes in, right? So gold has been battering back and forth across this 55 area. And when you have a pronounced area in the profile like this where you can have a fight, you can have attempts higher, attempts lower. And any time we know that moves begin from balance, they're going to moves are going to begin from a spot like this. Our job is to monitor that, and we do a couple different things to do that. We monitor that through order flow, monitor that through IB extension, and day type, open type, and so forth. But you can see that the auction was here. They tested higher in Globex, rejected, opened, tested lower, came back. That's basically telling the auction it can't go this way after it was told it couldn't go that way. Well, wherever it is told it can't go, it's likely to try to have excursion in the other direction. And then we kind of see where can it close? Can it ever close away from that area? Yesterday it did that. So after some balance right around the 55 area, we had a really nice break from the IB, some impulsive activity, close with value higher on the day. So that's a form of acceptance. And basically says unless they get quickly back below 1555, it's the auction, the buyer's auction to lose. So the trade setup that actually showed up is something called a Globex imbalance fade. So here's the close of yesterday, and you'll actually see the Globex. Here was the open of Globex, and here's the close of Globex. So they were net short. Basically, we just traded responsibly short throughout the Globex, but we did not get below this key level down here, and we stayed inside of yesterday's range. So when that happened, and on the open they come down here and kiss that 55 and bounce back through the open, you've got a really nice clear target 1 to 64, because it's basically the Globex imbalance is you're imbalanced away from value, and then when they come back into the session they rebalance it. That's an awesome. Doesn't that setup hardly ever shows up, but man, when it does, it rocks. And you also know where you're wrong pretty quickly with pretty tight risk, right? So the risk to reward looks great. So I like that one. That was kind of the best opportunity in gold today. Of course, NASDAQ and the ES, it was kind of this early out of balance and then rebalance back into the auction. After right off the open, you can see we spent about 15 minutes until we got to that PMI. That's where this this selling came in. That's where that PMI release was, and they didn't look. That got us back to the prior day's range. Then we were looking to see can we hold inside the range. Then we were looking for these singles, but ultimately we were looking for this, and all of this now is just the money trade. And again, we're in trend day, so I'm not expecting a low until the end of the day. And and it's a Friday trend. So unless we stop one time framing lower, we'll likely get even further lower prices on the reopen Sunday. So there's absolutely no reason to be long here.
Yeah, this is one of those ones where you could see this thing close on the lows.
Yeah.
And it's just going to hurt everybody. And that means if they do that, then the pain game is on for Monday morning, which a gap down that would be the pain game. So.
Yeah, and that 90.65, that's really kind of the next big level to the downside. We got a little bit to hold us up in here. We had some singles that we're coming back into. We've got a little bit of a node at 91.05, not a big reference. The really big reference is 90.65. And I mean, look, we got time. We could totally drop down there.
Yeah, and this is, everybody's going to be screaming. You're going to hear it on the news. What's going on with the markets? They sold off hard today.
Yeah.
And they're going to blame it on everybody. But this is just normal. I mean, we need a pullback. Goodness,
Yep.
A couple days pullback is not going to hurt. It's going to allow people to reload to the upside if there is more upside. So
yeah, let's look. Speaking of pullbacks, I want to pull up a weekly chart
of Tesla
on the NASDAQ. Just
Tesla's trying to fill that gap. How about that?
All right, we haven't even touched the 8 EMA on a weekly. That's 90.45.
Long way down.
That is a long way down, man. Look how thin this profile is from where we've come. I mean, that is way thin. This is not the stuff that you want to chase. Just
lows. Let's see how they react down here at that 83 to 91 area.
Yeah. Oh, that's a great question, Greg. Your question about LVNs or low volume areas. Mm-hmm. So high volume area is an area of what we call acceptance, where the auction is finding both buyers and sellers. A low volume area is where it's just rejecting that. And we find consistent behavior on the high volume areas that we expect the auction to slow. That's why we use those as decision levels, because it gives you time. A lot of the traders that we work with, they're not in front of the screens the whole time, and so they want to be able to set certain levels to look at, that they have an expectation of how the auction will behave. LVNs, first pass into an LVN, you typically expect it to come in and shoot out of, you take a rock and skip it across the water. It can just hit the and skip back out. But sometimes they punch straight through. So, but it typically requires kind of fast reaction to it, and so we don't typically call those out. But I mean, an auction coming into an LVN and rejecting back out can be an awesome trigger. Absolutely. Yeah, Tesla. Let's look at Tesla. So JP and I have been working our tails trying to get our arms around Tesla heading into earnings. It's been a fight. It's been a fight.
It has been.
Yes, we do look at TPOs. Now, we don't look at TPO in the sense of like a TPO. We look at the market profile graphic, that's what these letters are. Time price opportunity, to help us identify open types, day types. Where are we accepting? Are we building single prints? What's the structure of the day? And I think they're very important. There are traders that just use volume profile, and there are traders like Dalton who just uses the TPO chart. And I don't know how you can just use one or the other. I think you got to use both. So we use the volume profile to help us identify areas of interest, and we use the TPO profile, the true market profile, to help us figure out, oh yeah, we're in a trend day, so we should widen our field of focus. So the probability that we go hit 91.05, given the fact that we're in a trend day and we're creating holes in the profile here, is we got singles, singles from 17 to 98. We've got singles again from 61 to 56. We're now pressing again into new territory, and across these things. That's all stuff that you can see, that's just telling you, hey, this is really, really impulsive activity. Don't try to catch this knife. This could be a career ender if you try to catch this. Just saying.
Okay, so if you've not heard it, this is the time to say it, and this is the market to say it. And I always say this because it's other than the only thing you can control is your stops. It's this right here that you really need to pay attention to in trading. There's lots of trades out there. There's thousands of them, and here's the one thing I am 100% confident in, because I know it to be true. Not one trade will make your career. Not one. That would mean a trade would make you millions and millions of dollars. First of all, you probably don't have enough in your enough capital to be able to hold a position like that. And second of all, you wouldn't sleep at all. However, one trade can end your career pretty quickly. So let's think about that for a second. There's thousands and thousands of trades out there that's going to happen for you. This is a game of inches sometimes, and you're going to miss some of these things. And what happens is people get into a position and it's the wrong way. Like now they're trying to catch a knife thinking, okay, this is the bottom. It's got to, they got to buy it. The algorithms have got to turn back on. They don't have to do anything. And something like this, if they were to flush just 40 points and you don't have stops and controlling your risk, it could definitely end your career. Okay. And what do I mean by that? It could clean out your account.
Yep.
And we don't want that. So that's why stops are, for one, important. Two, be patient, because there will be thousands and thousands and thousands of trades. I grew up in the Midwest, Kansas, and we had lots of gravel roads around us. and I'm just going to stay right here. It's my story. Everybody who's in the Slack, I apologize. You've heard this story probably 100 times. I love dogs. I got a dog now, but back then we had a bunch of old dogs that used to roam the country, and they used to chase cars down the gravel road. And it was almost guaranteed that that dog would do that one too many times out there, chase that car. And that's the equivalent of chasing a market or doing something silly in a market. And it doesn't end well.
It does not.
So the idea is to be patient. There, just to keep telling you, put it, and I've got a note on my desk. I've had it on here for years. The note is this: there are thousands and thousands of trades. Be patient. You will get another one. I promise. The markets aren't going to close tomorrow. Well, they will tomorrow, but they're not going to close for good, if you know what I mean. So, but you get my point here, guys. That's the serious part of this. We don't want that to happen to anyone. It's not, it can be avoided. Okay.
Yeah. Good word.
However, we do know some people that struggle with it.
Yeah, we do. It's those animal spirits.
The dog spirits.
So this little graphic down here at the bottom in window trader, this is just it's just statistics to kind of get us a sense of where are we relative to. And when we look at averages, we look at everything within like kind of a month time frame. We found that that's wide enough to it's wide enough that you don't get minor fluctuations impacting that. It's narrow enough that you're looking at the market in front of you. And you can just see that we are way above volume, almost double the average today. We're double the average range. We had a wider. I mean, it's just saying, it's a big day. It's a big day. We are definitely in buy or shut off mode here for.
Yeah. So a question some of you may be asking: what caused this? Okay, well, we don't really know. There's some speculation that there's fear of this virus outbreak that's happening. Sorry, it's been a long week, early mornings. I'm on the West Coast, so I get up a little early. So it could be that we don't know, and here's the better thing: probably not even worth trying to figure out, because it's not going to make a difference in your trading. However, if it is that, it would tell me that the markets are jittery, because what they say, 3 confirmed cases in the U.S. is it maybe, or 2 or something?
Yeah.
And how many people did you say actually perish from the regular flu every year?
In the U.S. every year, 30,000 people die from the flu.
Yeah.
And no market's selling off. I mean, the reason we're selling off is because of the underlying structure of the auction.
Yeah, I would
That's
agree.
why we're selling off. And be it PMI reading, which by the way, manufacturing's been in a recession.
Mm-hmm.
That's a sector that is not doing great, but but really the inherent structure is there, and then you just need a catalyst. And who cares what the catalyst is? But the structure always is in front of the news, and the structure is, and you all will understand this. The structure is that you're trading way above value on multiple time frames. I mean, when you look at this chart and you see that, I mean, if I go back on this is just looking at a weekly, but let's just look at a daily, and let's just look even at the last. Let's look at the last 3 months. Okay, look at the volume down here at 8,300 relative to the volume here. So if say this was a housing market, and we're looking at comparable prices, all of the references are lower. So if you're buying way above value. You should get smoked every once in a while doing that. It's been working for the last several weeks, but and for us, because we've seen this before. We would rather wait, and get back to a good level to potentially buy this. It's at some of those high volume nodes lower, and we'd rather wait and take advantage of a short term short, and get a pullback to then buy, where we're buying below value on a monthly or weekly basis rather than trying to buy above it. That's just a recipe to get smoked. So
So that's sort of funny. So if any of you have Twitter accounts and follow other traders like we all sort of do, the last couple of weeks have been hilarious because I can't remember the time where I've seen so many P&Ls being posted of how well they're doing, like in Tesla and stuff, buying all the calls in the morning, buying the calls, and all of a sudden, they're up $4,000 by the end of the day on their calls and stuff. And all of a sudden today, I didn't see any P&Ls being posted for some reason.
yeah, so
Couldn't
fascinating.
figure it out.
Yeah, I mean, so let's watch and see that we've got a low volume node here at 91.21 that we could reject out of that first pass. But really that 90.65 area down here, that could be a great place to look for a responsive long. You're going to be below value on both you won't be below value on a monthly basis yet, but you will be below value on a weekly basis. If we just look at the last month, you'll see that value is still down here at 88.31, but it's going to take them a bit to chunk through this 90.65. In fact, if we trade here, this is an opportunity for monthly value to actually rotate higher. So we'll kind of watch that. This is a great question. I have 3 different platforms that we've shown here. So can you rank them from best to worst? Window Trader I would rank as the best, and that's the one where I spend most time, especially looking at intraday stuff. It doesn't load multiple markets really fast because it has to go and pull data from DTN every time it charges that. So like if I want to switch back and forth from markets, it's not great for that. So that's where TradingView can be really great to just really quickly pull up a chart. IRT as well is one that I use to help export levels to our community. And things that you can see, why I would say Window Trader above the rest. One, I can see multiple time frames in one view. So I can see a daily view, I can see a 30-minute view, I can hide a 5-minute view here. I can see the contract volume at price, and I can see the order flow all in one picture. And it's kind of like if you're driving down the interstate in a car, the less things you have to look at, the less error you're going to make. So may do prep elsewhere, but like when you get to execute, you go here. Cost rank is comparable. So TradingView, I think I've got and I have delayed data on that. I pay $30 a month for that. IRT, I think it's $90 a month with their volume analytics package. IRT is actually great. You can run studies. So a lot of behavioral statistics that we look at, we pull from IRT. Window Trader is $280 a month plus data feed on top of that for exchanges. They have 2 different versions, Window Trader Blue and Window Trader Lite. If you want to try out Lite, you can get. We've got a discount code we can give you, and you know, it's the tools you use. So you want to make good decisions, you have good tools. But you know, also respecting that people are at different capitalization levels, and some people it makes sense, and some people it doesn't. We got traders that use Thinkorswim, you know, which is a totally free platform if you have a funded brokerage account.
Yes, hit weekly VWAP to the tick and stopped.
Yep, does not surprise me. Does not surprise me. All right, I'm gonna close. I'm not gonna be a pig here.
Any other questions you guys have? I mean, just open, you know, we're open forum here, of course. Let's see here.
Let's see, how do I want to do that?
Let's see any other questions.
How we doing? We're right 3 minutes here to the close, or till our time is up.
Yep. So if you have them, just pop them in there, and just always remember, you know, there's no dumb questions at all. I mean, listen, Josh and I are not gurus, okay? We're traders, and the reason, you know, we've been able to survive is, I always say that, you know, we've survived a lot of mistakes. Let's just put it that way. We've made every mistake in the book. So if you're thinking it, we've probably made it, guaranteed, at some point. We just were able to get through it. Can you show the weekly VWAP to the tick? That is a beautiful thing. Josh, can you pull that weekly VWAP up?
Right here, 2 standard deviations. Well, actually, 2 standard deviations of the monthly VWAP is what they described.
Yeah.
Oh, no, wait, that's 2 standard deviations of monthly VWAP.
Yep.
No, that's just monthly VWAP. That's what it was.
Oh, that's monthly? I thought it was weekly.
Yeah, monthly.
Oh, you know what? You're right. Sorry. It is monthly.
All right, hang on a second. I'm trying
Passed weekly a long time ago.
I'm trying to wiggle out of something here real quick.
It is a beautiful thing, though. It's amazing how they use those things.
Okay. Did I get filled?
Sure, Greg. Sorry about that. I thought it was weekly. My fault. Today's sort of been a blur. It's been a great day. It's been a great week. So I didn't expect this today, though. I was expecting maybe a little selling, but no, I'm still not in this. We covered a long time ago, and but hindsight, you know, this is one of those deals. Okay, we did. So what? We're not in this thing. You know, we caught we caught a good trade today. A couple of them actually. So.
Okay.
On Tesla kept pushing. Trying to figure out what to set up for that next week.
Okay, I see this question. This will be our last one, and then we'll jump off. So how do you get price levels based on options activity? So there's a calculation on the Black-Scholes formula called expected range. So you take the closing price, you take the implied volatility percentage, and you take that times however many days that you, so like if you want 1 day, you take 1 times the square root of 2, or square root of 1 divided by 252. You add that to the close higher, you add that to the close lower, and that gives you your expected range within about 70% probability. So we're way outside that today. So I can tell you right now, some options are getting blown up. they're getting blown up. Now that is not accurate. Don't watch time and sales. That's a scalper game. I mean, we watch order flow to help us, you know, like on a short time frame to get into an area if it's an area of interest that we're looking to trigger. But we don't look at time and sales. Not to discredit that or say that that's not effective.
Yeah, we watch order flow, but
it just depends. It depends on what. Yeah, it depends on the type of trading. Oh yeah, regarding the options again. So yeah, on the options, you're just looking at the implied volatility percentage to help you calculate the expected ranges, and this can help you know when you come into a market. Again, like um, most of the 70% of the time you're going to stay inside of that price. So as the day develops, you can see obviously where the high and the low is. That expected range is going to stay consistent, so you can just kind of move that window to know where you're at. That, like I said, like with crude, we exceeded it today. So that that happens. Okay, let's wrap up, shall we?
let's land the plane.
Let's land the plane. So real quick, couple next steps. For those of you who have not spent some time with us, so Bob, to your question about our approach, there's 16 modules to our development process. It takes about 4 months to get you, kind of download everything that we know into you. People can start that at any time. We're always running through those. You just kind of jump into whatever module that we're in, and they roll as each module informs another. But we also recognize that we are not a fit for everybody. So the best next step would be say, hey, spend a week with us. We have about 5 hours of instruction, live market activity, intraday discussion. You can look at the plans. You can see templates, and do some one-on-one discussion. That's kind of a great next step. Also, just interact with us on Twitter and Facebook. And then, if you ever have any questions, you can always write us an email at team@tradewithprofile.com, or you can give us a call. Welcome to spend any time with anyone, even just like a 20-minute basis, just to kind of answer some questions. And again, see if it fit. We like to work with traders who are a fit for what we do. And sometimes it's hard to discern that unless we have a conversation. It's not we're not trying to pressure sell anybody, because good grief, if you're not a fit, you're going to be more work for us than it's worth. And so we really just want to work with traders who want to work on process and who really want to approach this systematically. If you're looking for trade calls and you're looking for us to basically just help you be an order filler, that's not us. We will talk about trades, and we put trades out there just to demonstrate mastery around the concept that we're talking about that week, and so that you can see that in action. And you're welcome to take those, but it's not one of those where we're going to be. I mean, we're busy trading. It's hard to trade and call out trades. It's tough.
Very tough.
Very tough. We do it when we can. We try to give people at least a 50-minute heads up, but on what we're looking for. But then, when it gets down to execution, sometimes you're trying to keep your wrist tight. You just can't text something and go from there. But so that is it. Everybody have a fantastic weekend. Just next week, be mindful. We got Microsoft and Apple report on Wednesday. That's a big component of all of these indexes. And so if that goes poorly, it could be interesting. So let's pay attention to that. And in the meantime, we'll get the recording posted to the website, and you can review it anytime with there, along with any of our other Q&As. Lots of information there. If you want to spend time digging through all of that, go for it. And then we'll be back next week with another Q&A. JP, thanks, brother.
Take care, bro.
All right, we'll see you. Peace.
See you.